Hello, everybody. Welcome to the Watches and Style channel. This is Young Brando reporting to you from a wintry night in Los Angeles. This is sweater weather, of course, and I'm loving it, being still a New Yorker at heart. Tonight, we're going to talk about the watch market, especially about some breaking news addressing recent development. Um, my loyal followers, my long-term subscribers would, of course, know that my channel was the first to actually talk about the crash all the way back in March, April 2022. Of course, to me, the writing was on the wall. Was quite obvious, but what is also obvious is that most of the other watch channels that you follow on YouTube are basically cronies of some of the worst manipulators and speculators on the gray markets, the gray market profiteers. And since they're serving that particular master, obviously they couldn't inform you correctly. They couldn't actually look out for your interest. For my part, you will remember a number of live streams that I did with the professor, an actual economics professor, about the crash and how it will, in fact, broaden and continue over the course of months and years. Um, Others were saying that it was just a momentary slump, that it will get better. They have said it will get better when the Chinese market opens. They have also said that the holiday season and the shopping spree that was fated to follow it was going to help the market recover. Of course, we have gone through many seasons since then, and we are here in 2024 and learning now that the watches of Swaziland, watches of Switzerland shares have plunged once again. Of course, this has already happened when their shares lost about 30% of their value in late August, when one of their stakeholders, one of their shareholders, pulled back after learning about Rolex's acquisition of Bukhara. We have talked about that on the Watches and Style channel as well. Um, and most of the fears and speculations that surrounded that situation um, did not necessarily follow. And as I said, in the short term, not much will change. Certainly, nothing will change about your buying experience. And in fact, as you can see, the certified pre-owned program has been now rolled out in the US. And it's not only Bukhara and their US partner, their US subsidiary, Tournon, that represents Rolex's certified pre-owned program, but also Golfberg and Watchbox, also known as the 1916 company now, and of course, Watches of Switzerland themselves as well. Nevertheless, that particular development, assuming that they might end up losing, at least in the mid to long term, one of their most important dealerships, already had caused Watches of Switzerland shares to plunge. And now we are hearing their shares have plunged 33%. I think this is a perfect segue because As you can see, despite a positive start to the early part of the third quarter of the fiscal year 2024, WOSG then experienced volatile trading performance in the run-up to and beyond Christmas as the challenging macroeconomic conditions impacted consumer spending in the luxury retail sector. Of course, Watches of Switzerland uh, operates in the US and the UK, and they're authorized dealers for not only Rolex, but Omega, Cartier, Breitling, Tag Heuer, and many others, and have more than 200 showrooms in the UK, in the US, and across continental Europe. Their shares have now plummeted 33% on Thursday specifically after they made the announcements themselves, cutting their guidance for the 2024 fiscal year. And they're in fact saying that even though they were expecting for that Christmas miracle, even though they were expecting the so-called holiday shopping spree to save them, um, that didn't quite happen. And in fact, that will continue those challenging conditions for the luxury markets in general and for the watch market in particular will remain for the balance of the fiscal year. But as you can see, we are now facing an environment, uh, fiscal environment, a macroeconomic environment, and in fact, a geopolitical environment where some of the conflicts that we were talking about, some of the challenges for the luxury market that we were talking about already back in 2022, almost 2 years ago to the date, are in fact still there. They are broadening and worsening, you might say, with other regions of the world, including the Middle East, of course, always and already, uh, basically affecting the conditions that guide consumer behavior in the watch market, in the luxury market. The festive period was particularly volatile this year for the luxury sector. They are saying that they're still encouraged by their gains in market share in both the US and the UK, which is to say they might be actually still taking a bigger slice of the pie, but the pie itself seems to be shrinking again. And again, going back to what I said in the beginning, thinking about this long term, I think anyone who has been interested in watches, heavily invested in watches, and I think mostly from the perspective of knowledge, and I think mostly from an emotional perspective, anyone who has been in this hobby for more than 3 years would know what uh, the category of luxury watches experienced in the so-called post-pandemic era was a singular condition, was a very unique purple patch that they had curated, and that it was not going to last forever. And now we are, in fact, facing this situation where not only the Watches of Switzerland shares, but the entire market will continue to plummet towards the end of the year. And the reason I'm saying this, and the reason that this particular piece of news is so important, is because Watches of Switzerland happens to be one of the rare publicly traded um, points of retail for luxury watches. So how their shares trade, whether the public, whether the investors have any confidence in them, has a lot to say, has a lot to teach us in terms of how that same public uh, is looking at the watch market more broadly, how much confidence that the average luxury consumer also has, and the average consumer has on watches. So, in fact, as much as I sometimes like to seemingly single out Watches of Switzerland for particular ire, I think it's important to focus on them because, as we mentioned, they are one of those giants in terms of um, watch dealerships globally. Obviously, we can think of Bukhara, we can think of Watches of Switzerland, we can think of Sadiqi and Sons. These are globally some of the largest companies that deal with, that traffic in luxury watches. So obviously, what happens to them is a harbinger for things to come. And this will be, again, from my humble perspective, from the point of my educated guess, this will still be the case towards the end of this year. I think the confidence that the watch market itself, in particular, has lost in the last couple of years with a number of publicized scandals that even made their way into the mainstream is not really helping either. Uh, so it would be really a fool's errand to expect a counter trend that would go against the broader macroeconomic conditions. At any rate, it would be foolish to expect something miraculous to happen against, again, the larger but also definitive trends in the luxury market. If you like this video, please hit the like button. That helps a great deal. If you are just learning about this channel, you should subscribe because I have watch-related content almost on a daily basis, and it is purely based on the knowledge of the horological space and the passion for wristwatches. So you will stand to learn much and connect to other like-minded people through this platform. I look forward to expanding the community, and I look forward to seeing you again. Until next time, stay safe, stay healthy, wear and enjoy your watches. Take care.